Yeah, this has been a long session for a networking event, so I just don't want to take a lot of time. So I want to give some data points in terms of, see, Chiratae Venture started in 2006, so we turned 17 last year. Cumulatively, we manage about $1.2 billion. I think what we take pride in the fact that we have also returned, as of December, $850 million to our investors. So I always say that making an investment in the private companies is like entering Chakravyu, right? So there can be a lot of Abhimanyus, there are very few Arjuns. So that is one of the things that we take pride in. And that's helped us get reinforced investments from a lot of our investors multiple times. So we have just completed investing out of our Fund 4. We have just started our Fund 5. And like Arun was saying, we also started a growth fund. So just to, that's just a quick introduction. We are, Series A investors in some of the marquee names that you would have heard and used, like Myntra. We were the first Series A investors. We were Series B in FirstCry, which recently just filed in the last week of December for, and we were the first and only investor in that round of Lenskart in Series A, which from managing about 1,000 orders per month when we invested, today manage over 1 million orders a month, right? So I just want to share in this journey of 17, 18 years and also what we look for in the next, say, 10 years. Some data points. So we've done an analysis, proprietary analysis, not as extensive as possibly Arun's database. There were about 14,000 companies which got funded in the last 16, 17 years since we started. This includes angel rounds and maybe, I think CK was talking about the FFF in the startup arena today in a fireside chat. That's a friends, family and fools round, right? So, and from there, only about 5,000 companies got institutional funding, right? And out of 5,000, which is either a seed or a round, only 1/3 of them actually even went to Series B. And out of this lot, we have only 115 unicorns. And some of it may be even debatable whether they should be unicorn at all or not, right? But eventually, if they use the money that they've raised, they can actually justify their valuation over a period of time. So those who invested at those valuations may not get the type of returns that they expected, but the companies may still remain a unicorn eventually. And we have our share of it. We have 9 of them, and then maybe another half a dozen which are going to become one. So this journey in the last 15, 16 years, and I also want to take a very interesting anecdotal point. So when Walmart wrote $16 billion check in 2016, okay, to get up to 80% in Flipkart, guess how much money came to India? Any guesses? Just 1 billion and a little bit change, right? And the billion came to Sachin Bansal, and a little bit change to employees who had some ESOP, and a few investors in our Indian fund, because we were also shareholders there. So one of our big learnings has been that while there has been a lot of capital in India, and I think most of it used to get classically in land and then maybe buildings and other things, that has not gone into this ecosystem. In this 10-year period, actually in the last 5-6 years, about $280 billion was the investment that happened in India in PEVC space, right? and out of which also exits were close to $150 billion, right? If you include 2017. So we were doing that analysis. And so it's a very robust ecosystem. And obviously, the big transactions are in control deals and where $1 billion, $2 billion transactions take place to buy out significant companies. Even then, the startup ecosystem, of which we are all part of, contributes about 10%, right, Arun? Continues to be approximately 10% in the PEVC world, right? And that has actually led to substantial value and companies being created. So we invested first in Lenskart in 2011 when it was possibly valued approximately $10 million, and today it's $4.5 billion, right? But Tamil Nadu actually is not new to funding startups. I want to give an anecdotal example. TIDCO joined with Tata's 40 years ago to invest in a company called Titan. They continue to hold 27.88%. That's worth 90,000 crores. So you have $10 billion sitting with you, right? Which possibly in 40 years was created in that investment. And those are things that actually can come back into the startup ecosystem. Even a very small fraction of it, right? If it comes back into supporting the startup ecosystem, Tamil Nadu can start punching at its weight. Another interesting thing, we have been raising money in India. In fact, in our last fund, 50% of capital, which is $337 million fund, 50% of the capital came from India. Share of Tamil Nadu is abysmally low, right? I don't even, punching below weight is a term that I actually was taking around, and I didn't know that it was also there in his slide, but it is like in single digits, right? And this is where, and in fact, I want to share with you one of the conversations I had with an entrepreneurial family in Mumbai. And they are investors in our fund. So I meet them once a quarter. So he was saying that, TCM, this is our hard-earned money, right? And we want to give back to the entrepreneurial ecosystem, but we don't know how, right? And we don't have also bandwidth to actually dedicate to source deals, evaluate deals, invest in them, and then come back. That's why we want to invest in funds like you. And there are a lot of, and most of you here would have been an angel investor, investing in anywhere between one company to possibly 15, 20, 50 companies. And many of our investors have gone through this journey and then realized saying that, yes, they made investments. Have they been able to spend time with the company, right? The second, have they been able to generate exits in those companies? Those are some of the things. And the mortality rate at that stage is significant. Like I said, out of 14, 15,000 companies which got funded, only about 1/10 of them ever reached even Series B. That's when possibly an angel can think about an exit, right? Many times not even that. The another big irony is that even if you got lucky in some of the companies which actually break out, investors, large investors, when they come in Series B, Series C, they clean up the cap table. So they don't let the angels actually get the big outcomes that they will be making. I'll just give you an example. Again, I'll go back to Lenskart. After the Series D round, we became the largest shareholder, right? And then being a limited time fund, we started selling. And then the last time we sold was in 2019, when it was valued at $423 million or something like that. That was 7.5 years journey. But from 19 to now, in fact 23, In 4 years' time, it went to $4.5 billion. Significant value creation takes place in the later part. That's why we call this as a hockey stick, right? So initially, actually, it will go down, and then it will just shoot up. And I'm sure Mr. Velamani would have seen it, right? For a long period, you won't know whether you are actually going to make it or not, right? And so me and Piyush, last April after the board meeting, sat and discussed saying, okay, if I did not sell, how much it will be worth, right? And that would have been worth $450 million on an investment of 10 million, right? So one thing I want to share with you all in terms of saying that, first, many of you are entrepreneurs who have created large companies. Thank you, Mr. Velamani, that you are actually giving back to the entrepreneurial ecosystem by being an investor. That's actually something that you have to look at it in addition to commercial outcomes, also as a responsibility, right? The second thing, does this return lesser? There is a CRISIL study which got announced last month, December, which said that in the last 10 years, PEVC funds returned 13% higher than public markets in India. This is BSE Sensex TRI. This includes dividend as well as value appreciation. And 13% is not just 10% being 11.3. I'm just clarifying. BSE returned approximately 13% return, and the PEVC industry returned 26%. It's literally double, right? And this is a published report. So this is an asset class which has come of its age, and we will see in the next 10 years or even next 25 years, when India will be 100 years in 2047. And at that time, Indian economy will be approximately 20 trillion in dollar terms, right? That because nominal growth is about 11 to 12%. You deflate it for 3% depreciation. At 8% appreciation itself, in the next 23 years, India will be $20 trillion economy. And that won't happen without a substantial disruption coming out of technology. And if you see US journey or Chinese journey, both of which have actually reached scale like this, that has happened with technology as a disruptor. And all of that will come through startups, because they are the ones who are going to be challenging the status quo. And we have examples of that in our own portfolio. Like, we have invested in a company at a seed stage, which is talking about autonomous car and taking a software approach to that. And this entrepreneur was all of 20 years in 2021 when we gave the term sheet to him for this investment. And he is not from a tier 1 town. He is not from a tier 1 college. He was in 3rd year of college. He had PhDs working for him, right? He is yet to complete his degree. And within, I think, 12 to 15 months of the investment, he's demonstrated level 4 autonomy inside a campus, right? And this is despite the fact that several tens of billion dollars have already been invested across the world by very, very large companies. But he's disrupting the whole thing with what is called nature-inspired AI. Because most of the global companies are using this. I'm just going a little bit in detail just to give an example of how Indian startups are thinking, right? People used to take maps and annotate. Even Waymo and Tesla use annotation significantly. And he said, you don't learn about every city with a map, right? So if you are driving in Chennai, you can also drive in Delhi, because you react to the environment there around you. And that's why he is using AI at the edge to be able to do that without LiDAR. All of them use a very expensive thing. If it succeeds, it will be globally an important player. These are the type of companies that we see today, because there was, when we started investing in 2006-07, there used to be a idea saying that what has worked in US, can it work in India? There used to be a lag. Today, you don't see that happening. Today, there is absolutely no latency, and there are times when actually Indian companies are in the first 5 or 10 companies in a category globally, especially in the software space, competing with Silicon Valley companies. Similarly, we invested in a Gen AI company before this Gen AI became a popular thing in 2023. Right? We invested in them in 2020. They had a $1 million ARR. In 2023, when they completed 3 years of our investment, they were at $65 million ARR. In 24, they will hit 100 million. They'll be the fastest to 100 million out of India, right? In a 4-year time, from 1 to 100. These are the type of companies which are winning globally, and that is what we see happening. In fact, according to us, Indian share in the global SaaS market will reach 20% in the next decade. And that's significant. And these are product companies which get valued substantially more than the IT service companies. I think IT service, which is $250 billion now, IT BPO, is larger than Saudi's export of crude oil. It is 25% of India's total exports, including products and services, right? But that is what has created today a very vibrant technology ecosystem. And Chennai, in that sense, is also like a SaaS capital, right? It's built fairly large SaaS companies. And whatever initiative that is being done by Startup Tamil Nadu should also play to the strength. Arun spoke about the fact that Aether started in IIT Madras. In fact, we were at a seed stage level invested in another IIT Madras company called Unifor, which last year got valued at $2.5 billion by a very leading Silicon Valley investor. So I think, and that was there in the presentation as well. I think what you would see is that I think the talent is there everywhere, and the average age of entrepreneur has come down from about mid to late 30s to now mid 20s. One word to describe them is fearless. They actually do not get worried or scared by the fact that they are taking on a Google or an Amazon, right? And that is the new India, that is the emerging India that we see. And that's what will create the value to reach a $20 trillion. And I can tell you the maturity that one sees in those early 20s is way more than possibly, I'm going to take a liberty of saying that any one of us here had at that age, right? That's a goosebump moment for me. Every day when I meet an entrepreneur and then get that. So all that I would say is that there are phenomenal opportunities. There are number of forums, angel groups are there, like TCA has been doing a phenomenal job. Native angels. In fact, I was there in 2022, end or 23 beginning, in the Madurai event. I was a speaker there, because Naga called me to come over and speak. And in addition to angels, there are organized fund managers like us. There are other initiatives that you will find. I think participate to the extent that you believe that you can add value to them. And also, I would say that if you cannot directly add value, then select a manager, right? And then join them. And anyway, this is not for charity. This, on a financial basis, returns better than public markets, right? And this has been proven globally in US for last 7-8 decades. And in India, I think the first report out by CRISIL has been phenomenal. And we have anecdotal experience. I think one can look at a return, net return, depending on, whether it's your own direct investments that you choose, or you invest through a fund manager. It can be anywhere from 20 to 25% net IRR, right? Which means if it's at the higher end, every 3-4 years you will double, right? So that's the order of magnitude outcome that people can generate. So that is nothing to scoff about than a passive investment in this thing. And I look forward to a day when India will have maybe 1,000 unicorns. And just to give you a context, 1994, when NSE got started, there were about 30 companies in Sensex. Even today there are 30, but 23 of them have churned in the 25 years between 94 and 2019, right? So you take now the Sensex or Nifty, I will wager that in the next 25 years, you will have at least 25% to 30% of them will be tech companies. So for example, second or third most valuable company today is HDFC Bank, which was started in 1994. So you will also have companies which are not even born today, which will be part of such indices. And that is the startup opportunity.